So I am going to review yesterday's PM session. Yesterday I was kind of busy with some personal stuff, so I didn't have time to get into the charts until the last 10 minutes macro, like 15:50 New York time till 4 p.m. It usually happens like even if my operating hours are usually the PM session because that's the time when I'm free to look at the charts after my work is done. So I decided to choose that time. So I always review in these sessions, not always, but as much as possible, I try to review the PM session. It is my goal to become a consistent trader using ICT concepts and focus on the PM session macros for trading. So the macros, I don't know if you guys know, it's usually some sequences of time. So in the PM session, what's important is like we always take the open at 1:30, and then we have a macro 10 minutes before the hour and 10 minutes after the hour. So in the PM session is 13:50 till 14:10, and then we have one 14:50 till 15:10. Then the third macro is 15:15 till 15:45, and then the last one, it's a short one at 10 minutes, 15:50 to 16. So this is the market on close. And using these intervals, we look for sensitivity at specific levels using the PD arrays that ICT taught. And that can give us some trade setups. So yesterday I was not able to be in front of the charts at 1:30 p.m. So the only time I was able was around 15:45. Like here I came and I tried to see if I can catch a small scalp in the end. But I will review the whole PM session and the sensitivity at the level. So if we look, we have the first fair value gap, so between 13:30 to 14:00. In that 30 minutes window, we look at the quadrant. So the lowest low being this one, and then the highest high, 14:00, would actually be this one over here. Small mistake here, I'll correct it later. But yeah, but these are the levels. I can actually do it right now so you can see. So 14:00 till 13:30. So I will modify this. So this is 18,959. 959. Notice the perfect respect here. And then we have the 18,925.75. And we have 18,892.5. And then this one. This was correct already. Okay, and I missed the 25. So 18,859.25. And we extend those to the right. I think ICT is saying every for the next 3 days. So I do that for like the next 3 days. And usually I display these just like on lower time frames, so it doesn't clot my charts too much. Like the chart already has multiple levels here. You can also like have these levels on a notepad next to you, but it's easier to have them on the chart. I think it's more visual. So if we go back to yesterday's price action, and I also like to have like a template for each day where I add these levels. So it's very important to manage it, to manage well and to be organized. Otherwise it can become a mess and it can be more confusing. But so let's go back. So 1:30 p.m. we have the opening price, so it will be this one over here, and we extend that to the right. Notice how perfectly it's being respected over here and in multiple instances. And then we have the first fair value gap. So there is no fair value gap between 1330 until we get to 1342. The price comes down. It's like in a consolidation here. And then here it just jumps. And notice how here we are also at the new week opening gap. So the current new week opening gap, as you probably remember. So here we have the new week opening gap, like the place where we close on Friday and where we open on Sunday, and we add the quadrants to it. So I have the same level here. So this is very interesting here. Notice how this fair value gap during the macro time, so between 1350 to 4010, we form a fair value gap at 1353. And it's forming exactly at the 0.25 level of the new week opening gap. And here we also have a mitigation block. So low, high, higher, low, comes back to it, see how it respects it with the body, and see how it respects also with the body the fair value gap. The wick can go below it because that causes the damage, and it's allowed to go just like that, just a little mohawk below it, but the bodies tell you the story. And then here 1400, the 30 minutes opening range of the PM session closes. So then we have here the high that we just annotated, and prices going up. And then we go up to here, see again, respect. This level is the midnight range. So here we have it's not showing very well, but if I go back, so look at this level, 1990, 18978. If I go back to midnight on Monday, 1990, 1947. I was looking at that one below. So here we also look between midnight and 30 minutes after midnight. We take the opening price, having multiple lays over, but here you can see the opening price of Monday, and here, and then we take this and we make a square out of this area. So here is the lowest low between midnight and 30 minutes. And then here we take the opening price. Here is like the midpoint of this rectangle. And then we look at the fair value gap that is most prominent. So this I annotated the midnight range Monday fair value gap and see the respect. So if we go to PM session, we see the respect of those levels. So notice here, now this was the midnight range you see over here. And this is the midnight range fair value gap over here. And this is the, I think this is the this is the midpoint of that. And then this is the midnight range opening price over here. Here, you can see that. And then notice how during the macro, like 1450 to 1510, we reach this area, we go a little bit above it. See how the bodies are showing respect around it. And then exactly when we have the 1515 to 1545 macro, so this is like a 30 minutes macro, we come down. Boom, makes this fair value gap, CB. And when we are bearish, we want to see price stay in the lower half of the fair value gap. And preferably like even just go with the wicks here. So we see how that is the case here. Like the wicks are respecting, like the bodies are not even coming in this fair value gap. So 1517 to 1532, we have this like high resistant liquidity run. And then 1530 is usually when we get a Judah. And notice how in 32 it starts, it makes this Judah, it makes like this 1542, it makes this wick go up here, but the body is staying below the fair value gap and is staying below the midnight range midpoint. See the levels over here. And this is telling us the story. So here we're doing a turtle soup, which is also known as a second stage distribution. So first stage distribution, if you watch ICT concepts, you will see that it's a bit slower. And then second stage, after that happens, after the liquidity is taken, and you see it moving fast. And then this is what we see here. And then when I came at my computer around this time, I was observing the charts, and what catch my attention was like this new week opening gap, consequent encroachment around 1922 something. So we see this one over here, see it here, and I saw how the body like respected how we have this like week happening, this big candle at 1550, and we were already in like a sell model. So here we had the turtle soup, and I saw this. And I thought to take a trade here, and I was watching for this new week opening gap from Sunday. The same, like this is the consequent encroachment, is this 25% retracement level, and there is a fair value gap here that I will show on the 1 hour chart. And I thought I can take a small scalp here. So from here to the going to the direction of the 1 hour fair value gap, which was confluencing with this one. So this level is at 18,920. And if I look at the 1 hour, here I can see the fair value gap. And this is the 18,920, the new week opening gap. And this is the fair value gap over here. Zoom it in. So I took a trade from like, so from here, I saw it being respected, and then I was aiming for this level. Let me go back here. Yeah, so after I saw this respect, I took a trade over here. It was a small scalp, just for 10 handles. And you can see it here in my account in AMP Live. And yeah, so afterwards there was one more setup. I don't want to trade after 4 p.m. So I didn't take this one, but I observed it, and it was nice seeing it pan out. So notice how after we hit the 0.25 of the new week opening gap, we formed this CB at 1555. See the perfect respect of it. This is just like beautiful to see. Just like one tick below the consequent encroachment of this fair value gap. And here is also in blue. Can't click it yet. But this is the, yeah, this is the high, as you can see here, 1400. This is the high of the PM range. And see how price comes to the fair value gap, respects the high. And then we had this relative equal lows. So we had this liquidity, we had some liquidity over here. And then it tends to do this, I've seen it many times, like it comes just above the low, above this low, and then it goes the other direction into a retracement. And here we could have our stop loss around here. This would be a conservative stop loss. And we don't want to see price spending time in the upper half. And price doesn't spend any time here. Just comes up, respects the consequent encroachment. Doesn't it, like, it's just a little bit to touch it, and then boom, it goes down. And here, this would have been like another nice little scalp to take to this liquidity and see how it comes in 2 minutes. So, and this also was a trade where I took it 1556, 1557, like in 1 minute, 10 handles. So yeah, so this was the price action of today. Here I also took made a note. Notice how the AM range low, so this is 9:30 to 10 a.m. So this was that 15 minutes. So we have the high 75, 50%, 25%, and then low, and see how price comes here at 1554 while we are in a sell model, and it's respecting it over here. giving us more indication that it's likely to go down towards that 1 hour fair value gap, which I just shown from 1 p.m. And then also confluence with the 25% quadrant of the new week opening gap. So this is the PM session of yesterday. So notice how like even if you have 10 minutes like in a day to trade, you can still find a setup by focusing on this macro. Like yesterday, I didn't have time, and this was enough just to find a setup. You don't need a lot of time to do trading. And one of the things I found out as a psychology tip is that the more relaxed you are when you do it, and the better it is. The results are better. If you try to push it in trading, you tend to do too much, and doing too much makes your edge dull and increases your probability to lose money as well. So it's better to do less and to do it with precise levels, like the ones I'm sharing in these channels. These are the ones that I was attracted to from studying ICT. You might find your own PD arrays that are your favorite PD arrays from his library, but this is an example of how I do it, and I hope it benefits you, the people who are interested in the PM session. Um, just stay tuned. I will keep on posting this analysis videos. So hope you enjoyed this one and looking forward to the next one when I'm going to share the next PM session. Have a nice day.